pre-qualification is just somebody basically taking a little information, possibly over the phone. Yeah, so everybody's in a unique situation. Everybody's different. Spend some significant time teaching them about the loan process. That's going to help you. So let's just look at it now.
Can they pull it out from under the mattress?
No. Okay.
The Bay Area real estate mom, and I'm here today with Karen Bartholomew from Summit Funding in Livermore. Karen is the branch manager and loan officer of Summit Funding. Hi, Karen.
Hi, Maria. Thanks for having me.
Thanks for doing this. So a lot of people have a lot of misconceptions, and there's a lot of myths going around about loans and mortgages, and I think it makes people fearful of maybe even taking a step in that direction.
Yeah.
So let's clear some of that up.
Yes, let's clear some of that up.
Here are some questions for you.
Okay.
So clients often hear two terms, pre-qualified and pre-approved. Are they the same? Are they different?
Actually, they're not the same. And pulling your credit. So it's really just a credit check. And so if I pre-qual somebody, it's like, I'm just asking some questions. I'm just getting some answers. You kind of pose the questions so much that you know that they're answering truthfully. And then you're pulling credit. That's the biggest thing to make sure the credit's good. So we're looking not just at the credit score, but we're looking at, like the history, the whole history of everybody. Because sometimes there's stuff on their credit report that actually can cause a wait time, right?
Right.
For instance, like we're looking at, if there's foreclosures or bankruptcies or short sales, there's wait times for all those kind of derogatory items in a credit report. So you have to really look at the whole thing. That would be a pre-qual. As far as a pre-approval, it means that we've actually gotten all their paperwork. We've actually got their tax returns, W-2s, pay stubs. So we're looking at not just the credit, but then we're looking at income and assets. And so we want to make sure that we, have verification of employment, that we're making sure that, if they have W-2 and they have some bonus income, that we're looking at that whole thing, commission income. If they're self-employed, we're looking at their taxes to see how much they write off. And so it's an all-encompassing look, almost like pre-underwriting it. So for our office, I have somebody who actually was a processor working with underwriting, and so she actually looks at that. So it's almost like a pre-underwrite. And if she has any questions, she'll ask the underwriter ahead of time to make sure that when we're pre-approving someone and we send you a pre-approval letter, that actually we know they're getting keys at that pre-approved price. So that's the difference. So one's just kind of preliminary, and the other one is all-encompassing. So we know that they're comfortable going out and shopping for a home and getting keys on that purchase price.
And once you have all the documents you need from the buyer, is it a long wait? Do they have?
No, actually, the quicker they get it to us, the quicker we turn around. So typically, we turn things around 24 to 48 hours, depending on the complexity of the documentation. However, there are times that we can get it done the same day within 2 or 3 hours, if that's the need. Yeah.
That's fast.
Yeah.
Another question I often hear a lot is. Clients feel that they wait, they don't want to look at homes seriously because they don't think their credit score is good enough. They think they need that perfect 800 or 790 score. Is that true?
It's not true, actually. We have loans that actually go down to a 550 score.
Wow.
Meet with that borrower and understand what's happening. And then we'll counsel them if we need to. We're always looking at everybody's credit score and how we can actually improve that credit score, even if you're at 700. We want to do what we can do to actually counsel them based on what's on their credit report to go, if we just do these few things, your credit score will go up 5 to 10 points. So every single borrower is looked at that way. Right.
Okay.
And so no, sometimes you only need 3.5% down, 3%, 5%, 10%. It just depends. Everybody is unique. And so we really need to meet with those borrowers and educate them and where we're going.
So if they're thinking they might buy in the summertime, when should they contact you?
Now.
Right now.
Now. Because here's the deal. Some people they will do things that will hurt them. So for instance, some people go, I want to pay off those collections, right? Or let me pay my credit cards down. Well, really, that's not spend your hard-earned money because we need that money for the home, right? So we don't want people paying off a credit card when there's no need because it's not going to help the file. So really, it's about getting together now, preparing properly and not doing things that will hurt yourself so you can be ready to buy a house in this summer.
Okay, perfect. So there was a time when putting a 20% down payment was the absolute gold standard. Nobody can buy unless you get 20% down. Is that still the case?
Yeah, and like I just said, we have loans anywhere from 3%, 0%,
0.
all the way up. Yeah, we have the USDA, the VA is, under a certain loan amount is 0% down. There are loans across the board. So the way we look at it, it's not that we cannot get you a loan, it's when can we get you a loan, right? It's either now, it might be 6 months, a year from now, but we keep our clients for a long period of time. So it's just when. Our whole job is to give hope and do as much as we can to get people in homes, and giving them the best customer service ever.
So
and then giving them back to you, Maria, to go shop for a home,
Exactly,
right?
exactly.
And then you're comfortable too, right?
Right.
And you know what you're shopping for.
So I think the key is don't go to open houses and fall in love with the house if you haven't talked to Karen yet.
Yes, because that happens, and then they're calling me. I'm like, oh, I need something, and then we have to. There are times that we have to say, we're not ready.
Right.
So, if you're not ready, you shouldn't really be going out there because you're going to find the home you love and you might not be ready. So let's get ready first.
Exactly.
Yeah.
Exactly. Okay. So in addition to the down payment money, do buyers need more money in reserves or in their account in order to qualify?
So every loan program does not, you don't need reserves on it. There are some that you do. And again, everything's specific. And so we want to look at that. As far as closing costs is what you're talking about, right? Typically, there are closing costs. They can range from anywhere from $6,000 to $10,000. However, we're always looking at getting concessions, which means it's quite possible that you don't need to come in with your closing costs. And so every situation is unique. And so we take a look at that as well.
Okay.
Yeah.
So back in about 2006 to 2011, we saw a lot of foreclosures and short sales and a lot of people filing bankruptcies. If someone had done that, lost a home to foreclosure or short sale, are they able now in 2019 to buy a home?
They are. So there are specific wait times for every different loan program. We do have a loan program, 1 day out of foreclosure, 1 day out of short sale that you can actually get. Now, let me just tell you, the interest rate's not amazing, but we do have a product. So, again, it goes back to meeting with the borrower and finding out what their unique situation is and then seeing how we can help them, right? So nobody falls in the same bucket. So I always hear this, well, my friend got this, right? Well, I'm like, but that situation, as you may not have been yours, right? They may have had different credit score, different down payment, different county, right? Loan limits are different for every county. So every situation is unique. And so we really want to meet with those borrowers, get to know them and their families and see what their short-term and long-term goals are so we can meet the needs for them based on this period of time. Yeah. So
as far as down payment money.
Yes.
So they can take it from their savings account, retirement accounts. Can they pull it out from under the mattress?
No. Okay, so I had one situation and it happened to be a family member that actually did pull it from her mattress, but she had receipts for literally 2 years of everything, written down. But no. So we need money in the bank. Retirement, yes. Typically, retirement you can pull out half for real estate transaction, but you need to call and find out call your employer and find out what that looks like because everybody's is different. But yeah, so there's many different sources, and so it's best to get all that information and then again educate the borrower. What do we need? Where are we getting it? Sometimes gift money comes into play. Some loans you can have all gift money. Some loans you're not able to have all gift money. So it just we're going back to unique situation for every individual person, and we we actually bring them here and treat them all that way, special with their unique situation in mind. Yeah,
okay.
So yeah.
So what I'm hearing is that every individual financial picture is going to be different, and the only way to really know is to pick up the phone and call you.
Yeah, call me. Let's get together. Come into the office and sit down. And we'll go over everything.
Okay,
yeah.
Awesome. Thank you for meeting with me and answering these questions
You're
and
welcome.
debunking the myths of mortgage lending.
Yeah.
This is Karen Bartholomew from Summit Funding. I'm Maria Diora, the Bay Area real estate mom. If you're interested in a mortgage, comment below, contact me. Karen's number will be in the description, and don't forget to like, share, and subscribe.
Thanks.